You're probably making the exact same mistake that causes 99% of traders to fail their prop firm challenge. How do I know? Because I made it over and over again, failing challenge after challenge, and feeling like I was just setting wads of cash on fire, watching it burn with absolutely nothing to show for it but a pit in my stomach. It's a uniquely painful feeling, that blend of hope turning into ash, again and again. In this video, I'm going to walk you through the strategy shift that took me from this state of constant failure to passing 5 separate funded accounts. And it's not what you think. This isn't about some new, magical indicator I found, or a secret algorithm bought from a guru. This is a fundamental change in your entire approach to the market, a deep, psychological rewiring that separates the consistently profitable, calm, professional traders from everyone else who is stuck in a cycle of anxiety and loss. Stay with me, because what I'm about to share is the key that finally unlocked the door. Let's be brutally honest for a moment. The entire prop firm model, while presented as an opportunity, almost feels designed from the ground up to make you fail. It's a brilliant business model for them, but a psychological minefield for you. They hand you a set of rules that, on the surface, seem perfectly reasonable. First, there's the profit target, usually 8 or 10%. It seems achievable, a tangible goal shimmering on the horizon. Second, they used to give you a time limit, a 30-day countdown timer ticking down like a bomb, creating this immense artificial urgency. While many firms have removed this, the psychological imprint remains. We still feel we need to perform quickly. And on top of all that, you've got the 2 most lethal rules, the daily drawdown and the max drawdown. These are the twin executioners of trading accounts. They create a pressure cooker environment so intense that it forces even genuinely good traders, people who know how to analyze the market, into making terrible, amateurish mistakes. So what does this look like in practice? Let's trace the path of destruction. The challenge begins. You feel the immense pressure to start making progress towards that 8% target, and you feel you need to do it fast. Your perception of time becomes warped. One day without a trade feels like a week wasted. So, you start taking trades that aren't really part of your plan. You see a tiny, insignificant move in the market, and that little voice of impatience in your head whispers, "Hey, you can just scalp a quick 0.5% here. Easy." It's not an A+ setup, maybe not even a B setup, but you take it anyway, just to feel like you're doing something. Then that impulsive trade goes against you. Now you're down on the day, maybe 0.5% or a full percent. It's not a disaster, but the frustration starts to bubble up. The pressure ratchets up another notch. Now greed and fear take the wheel. Your rational, strategic mind is locked in the trunk. You tell yourself you have to make that loss back before the day ends, just to get back to break even. That's when you jump into another, slightly bigger, slightly riskier trade to try and force a win. This is revenge trading, and it's a one-way, express ticket to blowing your account. Before you know it, you've either compounded your losses or made another bad decision and slammed right into your daily loss limit. The platform locks you out. The screen freezes, a monument to your failure for the day. The next morning, the pressure is even worse. You have the same target to hit, but now you have a smaller drawdown buffer to work with. The clock in your head ticks even louder. You start overtrading, taking absolute garbage setups and completely ignoring your own well-established rules because you're desperate. You're not trading the market anymore. You're fighting the rules, you're fighting the clock, and you're fighting yourself. It's a vicious, self-perpetuating cycle of emotional decisions that has almost nothing to do with your actual trading skill. Most traders don't fail because their strategy is inherently bad. They fail because their risk management, their discipline, and their psychological fortitude completely collapse under the unique pressures of the challenge environment. The statistics are absolutely brutal, and they tell the same story. Some sources indicate that up to 95% of traders fail their assessments. Reports from within the industry suggest that only about 5 to 10% of traders ever manage to pass the evaluation phase. And it gets worse. Of that small group that gets funded, as few as 1 to 2% of all clients who started the journey actually reach a real payout. When you look at numbers like that, it's easy to feel like the game is rigged against you from the very start. I was completely, hopelessly trapped in that cycle. And the most frustrating part was, I was a decent trader. I understood market structure. I could identify supply and demand. I had a strategy that worked beautifully in a demo account or when backtesting. But the second I paid that fee and the challenge clock started ticking, I would just fall apart. I failed my first one, a $50,000 account. I remember blowing it in the third week after a string of revenge trades. I told myself, just bad luck. The market was choppy. It was denial, a way to protect my ego. So, I bought another one. This time I was determined to be more disciplined. I was so afraid of the max drawdown that I became too timid. I missed good setups because I was scared to pull the trigger. Then, out of frustration, I took one oversized trade to try and make up for my inaction, and it hit my max drawdown in a single day. Failed again. I switched to a different firm, thinking maybe their rules would be a better fit. I tried a smaller account, a $25,000, thinking less pressure. And I failed again, this time by 1,000 tiny cuts, overtrading myself into oblivion, hitting the daily loss limit 3 times in 2 weeks. At this point, I had burned thousands of dollars on challenge fees alone. That doesn't even begin to account for the countless, soul-crushing hours I spent staring at charts, drowning in anxiety, my neck stiff, my eyes burning. My sleep was terrible. Every time I failed, it was a massive blow to my confidence, a deep wound to my ego. I started avoiding conversations with my family and friends about trading because I was embarrassed. I honestly started to think that I just wasn't cut out for this. The dream was dying, and a bitter resentment was taking its place. The breaking point finally came after my 4th failed challenge. I remember seeing the email notification pop up on my phone. Your account has been breached. I didn't even feel angry anymore. It was just a hollow, empty feeling of resignation. I closed my laptop, walked into the other room, and just stared out the window. I was ready to quit trading for good. I had followed all the standard advice. Have a trading plan, manage your risk, be disciplined, control your emotions. None of it was working in the one environment where it mattered most. And then, in that moment of quiet defeat, it hit me. I was focusing on the entirely wrong thing. My entire trading universe, every decision, every emotion, revolved around hitting that 8% profit target. Every single trade was measured against that goal. This trade could get me 1% closer. This loss puts me 2% further away. I was trying to force profits out of the market, and the market, in its infinite power, was just laughing and pushing back hard. My mistake wasn't on my charts. It wasn't my technical analysis. It was in my head. I was playing their game by their rules, a game that was mathematically and psychologically built for me to lose. So I decided, right then and there, to throw their game out the window entirely and create my own. The single biggest, most destructive mistake I see traders make is obsessing over their win rate. We're conditioned by social media, by fake gurus flashing rental Lamborghinis, to believe that winning a lot of trades is the key to being profitable. This ego-driven need to be right leads you to overtrade. It forces you to take mediocre, low-probability setups, just hoping you can stack up a bunch of small wins to feel good about yourself. In a prop firm challenge, this is the single fastest way to fail. You get chopped up by commissions, bled dry by small, unnecessary losses, and your mental energy is completely drained. The solution was a complete paradigm shift. It required me to unlearn everything I thought I knew about performance. I stopped focusing on the profit target. I stopped focusing on the win rate. I stopped focusing on how many trades I took. Instead, I focused on one single solitary thing, finding one perfect A+ trade setup per week. I call this the sniper mindset. Think about the difference in a real-world battlefield. Most failing traders are machine gunners. They get behind the gun, close their eyes, and just spray bullets everywhere. They might take 10, 15, even 20 trades a week, desperately hoping something hits the target. They burn through their ammunition, their capital and mental energy, at an alarming rate, and they create a lot of noise and chaos, but their accuracy is terrible. A sniper is different. A sniper is the epitome of patience and precision. A sniper waits, and waits, and waits. They might spend 99% of their time doing absolutely nothing, just patiently scanning the terrain, completely still, observing, gathering information. They are masters of their environment. But when that one perfect, high-probability shot lines up, they execute it with absolute precision, confidence, and lethal effectiveness. Then they disappear, their mission accomplished. Here's how you can apply this sniper mindset in 4 simple, actionable steps. First, you have to completely and utterly forget the profit target. I know it sounds insane, I know it feels counterintuitive, but the target is the psychological trap. The pressure it creates is the root cause of all your bad decisions. Your new goal is not to make 8% or 10%. Your new goal is twofold. 1. To survive the entire month without breaking a single rule, and 2. To only execute your personally defined A-plus setups. That's it. You are no longer a profit chaser. You are a professional risk manager. Your number one job, above all else, is protecting your capital. Profit is simply a byproduct of excellent execution. Second, become a specialist, a world-class expert. Stop trying to trade every currency pair under the sun, every commodity, every index. You are a jack of all trades and a master of none. Pick one or two instruments. For me, it was euro to US dollar and pound sterling to US dollar. That's it. Learn them inside and out. Learn their personality. Learn how they move during the London session, how they behave during the New York session. Learn their average daily range. Then master one specific, high-probability setup. Not 10 setups. 1. It could be a breakout retest strategy, a moving average crossover, a supply and demand zone flip. Whatever your tested edge is. Become a world-class expert in that one setup on that one pair. You want to know it so well that you can spot it from a mile away and trust it without a flicker of hesitation when it finally appears. Third, redefine your risk and exclusively hunt for high risk-to-reward ratios. The entire mathematical beauty of the sniper mindset is that you don't need to win often if your wins are disproportionately huge compared to your losses. I stopped even looking at trades that offered a 1:1 or 1:2 risk-to-reward. I started exclusively hunting for setups that offered a minimum of 1:3 and ideally 1:5 or even higher. This is the ultimate game changer. Let's do the math. With a 1-to-5 risk-to-reward ratio, you can lose 4 trades in a row, win the 5th one, and you're still profitable. This completely frees you from the psychological pressure of needing to be right all the time. My rule became ironclad. I implemented a strict 0.5% risk on every single trade. On a $100,000 account, that's a $500 risk. If I lose, it's a tiny, emotionally insignificant scratch. It's a calculated business expense. But if I hit a 1:5 winner, that's a $2,500 gain. One good trade can erase 5 losses and still put you ahead. This is how professionals trade. Fourth, have the extreme patience to do nothing. This is, without a doubt, the hardest part for 99% of traders. Our society glorifies action and busyness. The market is always moving, and the temptation to participate is immense. But the best traders spend most of their time on the sidelines, in cash, waiting. You have to become perfectly okay with watching the market rally without you. You have to be okay with not taking a single trade for days at a time if your A-plus setup doesn't appear. Impatience, boredom, and FOMO are your worst enemies. Remember the sniper. Your job is to wait for your shot. If your perfect shot doesn't show up, you don't trade. Period. Doing nothing is doing something. It's preserving your capital and your mental clarity for when it truly matters. If a light bulb is going off in your head right now, and you're starting to see how this shift in perspective could change everything for you, then I want to invite you to join my free Discord community. In there, I share my weekly analysis and break down exactly how I identify these A-plus setups in real time. The link is right down in the description below. It's a great place to connect with other serious traders who are committed to applying this exact same sniper philosophy. So, armed with this new sniper mindset, I took on my 5th challenge, a $100,000 account. The fee was paid, the account was live, but this time, everything felt different. I wasn't anxious, I was calm. I wasn't a gambler, I was a hunter. The first week, I took 0 trades. Absolutely nothing. Not a single setup appeared that met my strict, non-negotiable criteria. The old me would have been a nervous wreck. I would have been sweating, thinking, I'm running out of time. I'm falling behind. But the new me was perfectly calm. I was following my plan. I was executing my primary objective, preserving my capital, and waiting for my pitch. In the second week, on a Wednesday afternoon during the New York session, it finally happened. My A-plus setup, a perfect supply zone rejection, appeared on euro to US dollar. It was beautiful. It ticked every single box on my checklist. I calmly set my 0.5% risk, which was a $500 stop loss. I placed my entry, placed my stop, and then I put my take-profit target at a 1:6 risk-to-reward, which equated to a $3,000 gain. And then I did the most important thing. I walked away. I closed the chart. I didn't sit there and stare at the 1-minute candles, torturing myself with every tick. I trusted my analysis and my plan. The next morning, I woke up, checked my phone, and boom, a clean $3,000 profit. The trade had played out perfectly. With one single, patient, well-executed trade, I was 3% of the way to the target. Over the next 2 weeks of the challenge, I took just 4 more trades. 2 of them were small 0.5% losses. I felt nothing. They were just business expenses, part of the process. One was a break-even trade, where I prudently moved my stop-loss to my entry point when the market structure began to look uncertain. And the last one was another winner, a beautiful 1:4R. That banked another $2,000. At the end of the initial month, I had taken a grand total of 5 trades. 5. My win rate was only 40%. A machine gunner would call that a failure. But my account was up 5%. I didn't pass in the first month, but more importantly, I didn't fail. I didn't break a single rule. I was calm, in complete control, and profitable. I happily paid for the 1-month extension and rolled into the next month with the exact same patient, professional plan. In the first week of the second month, another pristine A+ setup appeared, this time a glorious 1:7R, our trade. That single trade was enough to push me well over the 8% finish line and pass the challenge. The feeling was absolutely incredible. It wasn't the frantic, lucky relief I had imagined. It was a deep, satisfying sense of professional accomplishment. It wasn't a fluke. It was a process. And to prove it, I used this exact same sniper strategy to pass my next challenge. Then a third, a fourth, and a fifth across different firms with different rules. It worked every single time. It worked because it's not a magic trick. It's a professional process built on a foundation of extreme patience, ironclad discipline, and rock-solid risk management. The secret to passing these challenges is to trade less, not more. It's to ruthlessly prioritize the quality of your setups over the quantity of your trades. You must forget the profit target. It is your enemy. Become a specialist in one thing and master it. Hunt for those massive, asymmetrical risk-to-reward trades and cultivate the discipline to wait for your perfect shot, even if it takes days. You do not need a 70% or 80% win rate to get funded. In fact, chasing a high win rate is probably the very reason you keep failing. You just need to be patient, be disciplined, and understand that 1 or 2 great trades in a month are all you truly need to succeed. You don't have to be right all the time. That's a myth for amateurs. You just have to be incredibly smart with your money and patient enough to let your well-defined edge play out over time. Stop making the same mistake that 99% of other traders are making. It's time to stop gambling. It's time to start trading like a sniper. If you got any value from this video and this new way of thinking, do me a huge favor and smash that like button and subscribe for more content designed to help you become a consistently profitable trader. And I want to hear from you. Drop a comment below and let me know. What is the single biggest struggle you're facing with your prop firm challenge right now? I read and reply to every single one. Thanks for watching, and I'll see you in the next video.